All right, joining us now to talk about this and other things, David Malpass, former president of the World Bank, Michael Faulkender, former assistant Treasury Secretary, chief economist of America First Policy Institute. I'm going to stand by this, David Malpass. Let the market set interest rates. I don't want the Fed lowering rates. I'd rather see tax cuts rather than rate cuts. How about that? Tax cuts are more important to the economy and America's future than more Fed pump priming and all the rest of it, which has gotten us into trouble. What do you think about that idea?
The reason tax cuts work is because it causes more incentive to work and more incentive to produce. So it helps a lot on inflation, and it also helps on income for people. So from a political standpoint, President Trump is right that he has never seen someone win on a tax hiking platform. So my thought is maybe Vice President Harris will pull off that and say, no, we're going to keep taxes okay for everybody, because they will figure out that this is really important politically and from a growth standpoint. Interest rates, I think, are not the key variable. It's taxes.
Mike Faulkender, Kamala Harris is already out there talking about raising taxes. I mean, she blames business for everything. She blames businesses for inflation and price gouging and all the rest of that stuff. She's a taxer through and through. She wants worse tax. She wants wealth taxes on unrealized capital gains. She wants to roll back the Trump tax cuts. I mean, you saw this tax calculator thing. Almost $3,000. Family of four, right? Married, filing jointly, $75,000 a year. They'd pay $3,000 more in taxes under Kamala Harris, Michael Faulkender.
Well, Larry, it's just a fundamental difference in economic approach. Do you trust the American people to spend their own money in the way that they think is best for themselves and their family? Or do we instead need bigger government, taking in higher tax revenue and deciding how to spend it? So, Larry, not only do we need to focus more on making sure people have more money in their pocket rather than a lower interest rate on any debt they take out, but the other big thing that President Trump offers is deregulation. Let's have the government stop telling businesses and individuals how to run their lives and instead allow them to figure it out for themselves. And so if you couple an extension of tax reform with a deregulatory environment, we can grow our way out of a lot of these problems that the Democrats are creating.
David Malpass, who was Walter Mondale and where was he from?
He was from Minnesota, and I guess he ran but didn't do well in some election. I forget.
Why? What did he run on? What did he say?
He ran on higher taxes. Yes. I forget the details. It doesn't matter because it's deep history. It's gone.
And Kamala Harris has chosen a running mate who was governor of what state?
Minnesota. It's the one state that didn't vote for Ronald Reagan, and the rest is history. He had huge growth in his second term, and it was based on the aftermath of good tax cuts that really made it work. Can I say one thing, Larry? The Fed is in a bind, so I'm a little bit sympathetic. They're the biggest carry trade in the whole world. Think what they're doing. They're borrowing on the short end to buy and prop up the stock market, and that only lasts so long. So I think they're doing a lot of work in the administration. The Treasury is borrowing short, the Fed is buying long, and so they're really manipulating it to try to get to November.
Yeah, I mean, that raises another point. Faulkender, the whole world is over leveraged right now. The stock market is still down, I think, 13% from the sell-off last week after the ISM report. It's come back a little bit, but it's still up. I'll get the right number in a second. But the point is, the yen carry trade, that was because there was essentially a zero interest rate on Japanese yen funds, which then the central bank raised their target 1/4 point. And then the yen currency, which was in the dumps, started to come back. But I'm saying that was a leverage trade, over borrowing in yen. Now that trade may not be over completely, or the consequences. Here at home, the Magnificent Seven tech stocks, even the biggest Wall Street bulls acknowledge that they're over-leveraged and over-borrowed. There's too much money in there. And, of course, consumers have compiled so much debt. And, yes, the federal government has compiled so much debt, and they're financing it in the wrong way. I mean, that's why I think tax rate cuts are much more important than Fed rate cuts. If market rates want to come down, let them come down. That's a different matter. I'm just saying what we don't need is more Fed easing, more money supply, more artificially cheap money that's going to blow up in our face again. You know, the stock market crack up earlier this week. I don't think it's run its course, but whatever I think, that's the risk.
You're right, Larry, because there is entirely, as you said, there's too much borrowing going on. And what lower interest rate environment does is it discourages savings and it encourages yet more borrowing. The idea that what we need to do is get more debt on top of, as you said, corporate balance sheets, household balance sheets, and the federal government more than anything else, as if the debt that we already have isn't creating a big enough problem. The Fed coming in and incentivizing more of it is exactly the wrong solution. Let's stop relying on the Fed to fix the bad economy created by bad fiscal and regulatory policy. Let's instead get a tax code that encourages growth, a spending series that actually is affordable, and a regulatory environment that encourages private sector activity, rather than think the Fed can come in and micromanage the economy.
There you go. David Malpass, unemployment is rising, jobs are slowing, ISM manufacturing falling, housing falling, consumers holding on, maybe barely because of all this debt. And, of course, the government is borrowing like crazy. I don't think it looks like a healthy economy. And I want to ask you, do you think the economy is at the front end of a recession? Not a recession yet, but the beginning of what could be a recession.
I think we clearly have a slowdown, so it matters what policies you do into 2025. Markets look ahead. But the distinct thing to me is the difference in if you're in the upper crust within the economy, you're doing fine because they have set up a set of policies to benefit people with money and with assets. And that leaves most of the people in the economy behind. They don't have the stock, you know, a big stock market portfolio. Well, most of the voters are going to have to look at this and say, this is not a good economy for me. Inflation has eaten up my earnings, and I may get one raise, but I'm falling behind year after year. And Larry, final point is VP Harris is running on Biden's record, which is for slow growth all the way year after year into the future. That's the forecast for this economy.
Yeah, well, that's what you get when you raise taxes and regulations, and bumping up the government is not the path to prosperity. Gentlemen, thank you. David Malpass, Mike Faulkender, we appreciate it.